Good day, ladies and gentlemen. Welcome to my practical financial accounting lesson. Today I will be dealing with the solution to last section lesson, which is the solution to the case study 7, OSPAC Limited. And this is when we deal with the cash flow statement. I hope people are ready with your pen and paper and calculator. We'll be going through a lot of figure crunching exercise. Remember, a lot of control accounts need to be built here today, because it's from here we can fetch out our cash transaction that we need for our income cash flow statement, especially the operating activity section. My name is Dunzo Laurel. On the screen is my email address. You can use that to email me should you need to clarify points on my lesson, or if it's to do with this particular lesson, quote reference PFA 200207. Yeah, we dealt with cash flow statement last time. Because of time, I will go straight to the exercise. For that reason, I will quickly go to our requirements, which is here. We are required to prepare the cash flow statement using the direct and indirect method. And as I said, you have to be methodical in your approach, using the line-by-line approach, working from the beginning and to the down. Right? Make sure you don't omit any information. When it comes to such a question like this, I always start from the additional note. Okay? When I start from an additional note, I will start building the control account from here, and when I need to do so. Otherwise, I will post the items directly to where they belong. On the Excel here, I will head my account as OSPAC Limited, and it's for the cash flow statement for the year ended 31st December 2020. I will now complete certain information like the method we need to post, and then the operating section is what we need to do today. Okay, operating activity, which is point A. That's the section A. Now we go. I think I have it clear now. I have this section. The column here is for application, like deduction, and source is addition, and the net column here. So when I go straight to the additional information, I'll start posting from here. So be ready and follow me straight. If at the end of the day, if you have any issue, please email me and I'll be able to assist you. So note 1, operating expenses comprise of depreciation, which is 15,000. So straight away, I know it's not it's a non-cash flow item. I will now open an account for that, which is the asset account. I have a combined asset and cost and depreciation account. For want of space, they can be combined for this kind of particular exercise. So I have my net current asset equipment account combined. That's asset and cost and depreciation. Then I will post the depreciation 15,000 to the credit side. The next item is salary. I will quickly go to the operating activity section and post the salary. So that's a heading for working. You have to refer to where your working is. And this is from note 1. You can see it's note 1, not working. It's N1 means note 1. If it's working, it will be 1, 2, or 3. So the amount is 45,000 there. Loss on disposal, we go straight to the disposal account. We have to open that. I will go straight down. I'll open the next account, and I will name that disposal account. So the amount on of loss is 10,000, which I will post on the credit disposal account and debit income statement. That's the double entry here. So the other item is operating expenses, which is 65,000 cash. I will go straight to the operating section activity and post that there. So that is note 1 still, and that is 65,000. Note 2 is saying equipment was purchased during the year for 140. I will go to the equipment account again and post it there. P, that is 140 is for cash. Note 3 say equipment was sold during the period and the cost is 60,000 and the accumulated depreciation was 45,000. While I'm here, I'll take it off. Okay, remember when you have this, a debit asset is a debit balance, as we did in my last session. To reduce the debit balance, you have to credit it. So as we are taking off this asset to be sold, we have to credit the equipment account to reduce the debit balance. And then the depreciation again, which was created originally, will be now debited to take it off. So I'm going to debit this account with depreciation element. And these two items will now go straight to the disposal account, which I will now debit with the asset cost and credit with the accumulated depreciation. That's there with that. Nothing will be dealing with dividend later. From now, I will now go back to the balance sheet, statement of financial position, asset. Cash is what we are targeting. The difference is 15,000. So I made a note of that there. And now move on to receivable. I have not opened receivable account. I will go straight and open receivable account, which will be this one here. Open it, the receivable account, and I will debit it with balance brought forward and credit again with balance carried forward. I will deal with these two here so that I don't waste time. This is just a working exercise. The next one is inventory, which I will put into a cost of goods sold account. I will open that account now here. Okay, and that is the cost of goods sold inventory. I will now post the necessary items here and debit it with the further balance brought forward and credit balance carried forward. The next one is equipment account, which I have got the account open up there. I will go back there to equipment account here, and I will post that entry of opening balance, which is 250 debit, and carry forward, which is 325 credit. It's a carry forward. It's going to come back to the other side of things at the bottom line. If it's the account, this is the balance carry forward, and you have to bring it down to the debit side and balance carry forward. This balance brought down. Normally, it will be balance brought down, and the balance carry forward here. So let's just call it balance brought down. Carry down, sorry, carry down. Okay, it will be brought down here, brought down here, carry down here, and be brought forward later. That's how it's going to be, okay? Now, what do we have to do? The next one is the accumulated depreciation, which we can also deal with here, post it, okay? The brought forward was 125, and the carry down, okay, carry down will be 90, all right? That's how we're there with that. We go to the next slide, which is liability side. The next thing we're meeting here is payable. So we open our payable account. We haven't done that at all. I'm going to go down and open a payable account. Next available space, I open payable account. Here, I think so. That's payable account. Yeah. All right. Then let me call it payable, okay? Payable, purchase payable. Payable, call it payable. Payable account, all right? Now, I will now post the figure there, which is opening figure was 40 and carry down, okay? Carry down will be 30. Tax liability, we haven't done that. Let's open it again. Next available space. Tax liability. The figure there is brought forward 15,000. Post that. And carry down is 10,000. Okay. Loan account is straight. There's no information about it. I think it's the only thing this year. Cash received. We're gonna put it straight in the that section when we get there. or we can go and do it in the financing activity section now. So go back. This is operating. This is sorry, leave that now for now. Investing. Financing. So here we just put the loan account there. It's a source, go straight to the add column. Share capital is a movement which is 15,000 from 50 is increased to 65, so it's a movement of 15,000. We can put that straight away here. Okay, you can see that. All right, share capital. Share capital, all right. Okay. All right. So what next? Nothing to do here. This is just, I will use this bottom line to do the dividend movement eventually. We see that later. So go to next page, next slide. Now, sales. The sales